there are markets with cards, some markets never seen cards. So it's a very interesting time, and there are some markets which are absolutely dominant with the mobile wallets, where in those markets they are absolutely necessary. And I think the share in general of mobile wallets will grow, but it will take time, learning curve, etc., and etc. There are many conditions for this to truly roll out broadly. Add to Eugene's points that mobile wallets do bring cash availability in different markets, even in those rural areas where there is no branches or money transfer organization or the bank or ATM. That's number one point. Another point, which we actually also discussed during the lunch, is that it also brings financial inclusions to women, to the population, which normally does not hold money or not kind of given those money to hold them or to take care of budget of the family. And very often they have to ask their husbands to share money or to spend them according to the family needs. So in this case with mobile wallets, they actually receive on their own mobile device, and they can spend it in a way they think it's important for the family or potentially for their own needs, which I think is a great tool for financial inclusion of this part of population, which otherwise lives often kind of in trouble and asking for money. So I think that's an important point to make. In addition to this, general rollout of mobile wallets will depend on acceptance. Like for example, when cards were launched, and I work with MasterCard, the main idea was to really reach that acceptance level, acceptance at retail, at regular places, that everybody will start using it, right? And it takes time for that acceptance to roll out. And the mobile wallets, they're facing the same challenge today. Some retailers or some businesses, they accept mobile wallets, but as a payment method, but it's very limited. That's why Eugene mentioned that they often receive money and kind of cash it out, like ATM. They use a mobile wallet as ATM, right? But but when it's used as ATM, there is another problem, that you have to pay an ATM fee, which you also often pay a fee for cash out from the mobile wallet. Nobody really likes it. Now, when you will be able to pay with mobile wallet for whatever you need, and in those countries, that will obviously increase the usage and penetration of mobile wallets drastically.
Previous to this panel, we had quite animated conversations about mobile wallet. I am a big fan of mobile wallet, but it does, the ecosystem of where people are living, it needs to be accepted in order to really make it a more viable proposition. The other thing that we haven't really mentioned today, and just to say this, is we're seeing the trend, especially here in Asia. I feel like we're at a tipping point where we still have mainly feature phones in many of the markets, and we're moving because of the reduction in cost. We will be seeing more of smartphones, hopefully maybe even 50% in many of the markets out here, many of the emerging markets. And I think what people will be able to do with smartphones will be quite dynamic. So now I actually live in Singapore, and we have something called fast payments. I am so excited about this. I can send money to anyone 24/7, and it is received in their bank account in less than a minute. Now, there are, I think, Sofia, you said there are about 21 countries now that have fast payment systems, and so, I think we decided this is an area that will quite significantly help and build stronger business models. So, throw that out to you to comment on.
Well, definitely. Well said. I mean, it's extremely important and helps real-time fast delivery to the bank accounts. And the bank accounts are still widely used, depending on countries, of course. In some countries they're more used, and others less used. In some countries they're less used because the delivery of funds takes from 2 to 3 days to 1 week, or sometimes in some cases even longer, with the research of where money are, with all the corresponding banking model where you don't know where your money is stuck. Now, with the new technology in space, that would be a combination of domestic faster payments and cross-border payments providers, including different types of fintech that connect those faster payments globally, right, on the global scale. That will allow for real-time delivery from the starting point to the end point. But obviously, for this to happen, there should be both steps in that chain be real-time for cross-border movement and real-time domestically. Today, there are many fintechs actually that do real-time payment from one country to another, but why the money are not delivered in real time at the very end point in terms of the end account is because in some countries there is still no real-time payments domestically. So I think that's definitely a trend that's globally happening. And right now, US is rolling out this, which is a very big market as well, for send out or for receiving, also big market. So, and I think this trend will continue expanding globally. So eventually, most of banking systems will be in real time, and that will allow for true real time end-to-end. In addition, with combination of this new technology and distributed ledger, that will actually allow for not only real-time messaging, but also real-time settlement, which will increase the efficiency of the whole system drastically and reduce the cost.
And just to add on that, I think it's actually it's quite similar to the mobile wallet. So you know, you need infrastructure, you need scale, and you need interoperability. So before you can start discussing adding new services like remittances, like insurance, or wallet, you really need you need people using it. And the truth is that up to now, yes, the case study of like M-Pesa in East Africa, also in West Africa, it has been good, but it actually hasn't been replicated yet. So you can put insurance on a wallet, but then will you have people actually using it? That's the situation.
And Eugene, do you have any comments on? Yeah.
Sofia covered.
Okay. Now I wanted to throw out card companies. So some of the models that we're seeing in remittances are based on prepaid card. So Sofia, I'll start with you. You may have an opinion.
Actually, I would say there are different types of engagement on the card side. One is when the money paid out to prepaid card. That's just one model which existed for quite a while, and it's still kind of growing in terms of penetration of that model. But there is also a model when you actually send money from the card, using the card, and delivering money to the card, using the card number. So, and that's those kind of systems they're provided by the card networks such as MasterCard or Visa. Visa called it Visa Direct, MasterCard called it MasterCard Send. But the real ability is to send money to the card or underlying account, so to say. The good thing about that model that it's very fast. The downside, obviously, is still the banking channel, and it's still not 100% global. So it's growing in terms of penetration, but today it's not global, meaning it's not like you can send from any country to any country on the card, because it's depending on technology, on the card's enablement, on the banks which issuing those cards. They need to do certain work on their side. But in general, I would say it's quite a convenient way of delivering to the cards, whether it is prepaid card or actual debit or other card which is attached to your account. And in my previous role when I was at MasterCard, we did some research on this in certain countries, and what we found out, there is quite a big broad population that prefers to receive to the cards. But what's funny in that research, though, is that the primary preference of receiving to the card was not related to the fact that they can use card everywhere or want to use card. Not at all. It was funny. And I'm talking about not the European market, I'm talking about Asia and the Middle East and kind of Africa also. So in those markets, they prefer to receive to the card because they consider it safe, secure, easy to receive, but then they still often go and cash out in those markets.
Okay, but at least they didn't have they wouldn't have had a problem using it to purchase many goods. Yes?
Yes, they wouldn't have a problem, yes, of course, but still, it's kind of interesting because instead of, saying I really prefer to use cards everywhere, they want to cash out. But I think it's truly also related to financial inclusions, because it's kind of teaching customers on what to do with the cards, how to use cards, how potentially manage your budget on the card, maybe even keep like some saving type of funds on the card. So it's really a good way to step into the financial world.
Did you have any comments on card?
Yes, 2 points. One is that I believe that the industry can do deposit to cards as long as it's a card that is issued by a bank for compliance reasons. Because there are many companies that they issue cards, I'm not going to name them. They're prepaid cards that we usually don't know who owns the prepaid card. I think that's a good for the industry. We can reload cards that they're issued by the banks. It's like a deposit to an account. The challenge that we have is that we have been talking here, or some people were talking here this morning, about the fees and the effects that the remittance companies charge. It's very nice to say that, but it's very complex to run a business. We have the fees that we have to pay to the payers, we have the fees that we have to pay to the banks, and all the operational expenses. Having said that, the challenge that we have is that the cards, and we were talking about this over lunch, and there are different points of views, is that when I have met with some companies that with which you can do deposit to cards, the challenge is that the spread that they want to charge on the FX, we're talking about 200 to 300 bips, and that's not profitable. It's not profitable for anyone. Well, it will be profitable if someone pay for a service, $10, $15, what, $300 transaction, but that's not going to happen. So the issue is that the companies like Visa and MasterCard, they have to offer the service and they can get into this business as long as they offer a very competitive FX rate. The issue is that the FX that the companies charge in different countries can be anywhere from the US, that's very competitive, about 3-4% a year, versus you go to other countries where they charge up to 60% a year. So how can you offer a service that's competitive? It's next to impossible. You have to offer a service, deposit to cards, as long as the fees and the FX that the paying partner is offering are very, very competitive.
I agree with Eugene, and I think there are different models depending on how the flow goes and what type of cards you deposit and at which moment the deposit actually happens. There could be better or worse FX rate, so it's really different. Just one point to add is that what's interesting, the card network companies such as MasterCard, for example, not only looking at the card channel for remittances, but they're also looking at multi-channel solutions, which they basically compete with many other players. The product MasterCard Send, for example, they are delivering to bank accounts, cash payout, e-wallet, mobile wallet, and cards. So in general, it's interesting just to kind of see how the market trends changing in terms of everybody now wants to do everything, kind of. You can say that.
Yes. So the good news again is I think that we are at a time where we have many different tools, companies have many different tools at their disposal to bring to market a good product for the remittance clients. Now, if you can remember back to this morning when the Global Compact for Migration was mentioned, just to remind you, it's the apparently first intergovernmentally negotiated agreement prepared under the auspices of the UN, and it covers all dimensions of international migration in a holistic and comprehensive manner. Now, what's very important here is there were two objectives, being 19 and 20, that have to do with remittances and migrant workers. And before we came together, we read through those objectives, and under Objective 20, we wanted, as a panel, to comment that we felt there could be an addition to that. And I'll let Michele take that point, because it's really in your area.
So I will take my very comfortable insurance chair and advocate for that. We believe that this objective and 20 should include microinsurance under that paragraph 20 in India. And it's really for the same reasons that we discussed before. I mean, the migrant workers, they are the ones that need insurance and that need protection the most. If you look back at when actually the insurance industry was born, 150 years ago approximately, we could argue that in those 150 years not much have changed, but still insurance, it was born as a way to provide mutual aid to those in need. I mean, who more than the typical migrant workers who often lack access to any other social protection tools, who often lack access to good quality healthcare that insurance could provide.
So for those of you who are not so familiar with the objective 20, I just want to take a moment to read. It's actually 20I, which is, it reads, provide access to and develop banking solutions and financial instruments for migrants, including low-income households, such as bank accounts that permit direct deposits by employers, savings accounts, loans, and credits in cooperation with the banking sector. So if we really look at the financial inclusion model, for us when we were reading through, it was missing the insurance, which we all agree is a real benefit for the migrant workers and can be linked to remittances. So on that note, we only have, I think, about 15 minutes of time, and I wanted, we have a panel here with incredible experience. I wanted to open up to the audience to see if you had any questions for the panel. Okay, the gentleman, if you can state your name and company. Okay, technology is good when it works.
There we go. My name is John Scrifano. I'm in charge of new initiatives at Remitly. So I work with Gene, which you can imagine is lively, to say the least. My real question is actually for Sofia, though, because I think, just a point of clarification, you said something that seemed different than what everybody else here has said so far today. And what it sounded like you said about the prepaid debit card, or the receiving the payment on a debit card or remittance, you decoupled that from its acceptance at merchants. So far what I've heard from everybody else has said is nobody's going to take a wallet or a debit card or anything else unless there's ways to spend that money on at a merchant. It's just not sticky. Did I hear you correctly in saying that your research said the opposite?
Yes, you heard this correctly, but just to mention, that research was done in specific markets, so it wasn't in every single country in the world. But specifically, I was referring to that point came out in the research in Philippines, where the people from kind of rural areas, they said that they would like to receive money to the card. And I said, what you will do is this afterwards. Majority of them said that they will cash it out. And I said, then why do you need to receive to the card? They said, well, because they feel, first of all, safe that the money on the account, and they may not cash out everything. They can keep half of it or part of it on the account. And secondary, they have a perception that when they go to the money transfer operator location, that it's unsafe. They feel very unsafe that somebody can watch them and can follow them and etc. And they feel much more safe with the ATMs, because ATMs, normally they take out like a small amount and it is in different places and inside of the stores and etc. So they felt kind of more comfortable with this. Yeah.
And was that just survey data, or did you actually see that in the wild? People were choosing to take it on cards and then were using those cards in the exact way you mentioned?
That was specifically the survey results,
okay.
But after that, we actually, I was working on launching that service. Yeah.
Thank you.
Okay, there's a question in the back.
Hello, good afternoon. Kahing from Bank Negara Malaysia. Yeah, I have a question for the panel. If you look at it these days, countries are beginning to research and then to move from fiat currency into digital fiat currency. I would like the panel to share their remarks on the opportunities and innovation when we start heading that way, digital fiat currency. Thank you.
One comment on that, and just looking at the lower income population. So if it's quite similar to what we said before as well, right? So the starting point. So as of today, let's take insurance again. 97% of people in our emerging markets do not have access to insurance. So you can facilitate that access by getting closer to the customers, remittance houses, with mobile operators. But would it really make a difference to offer to low-income communities the possibility of paying insurance by using Bitcoin? Maybe not. So for these segments, we don't think it would increase the access to insurance required.
Well, I would see the benefit. Actually, right now, I think the growth of cryptocurrencies is quite related to the fact that they are not regulated the same way as the regular currencies. But I think it will change with the future, and a lot of countries, regulators right now are looking into that. And as soon as it will be regulated as any other currency, I don't see, personally, I don't see a lot of benefits in it. And especially keep in mind that they've been traded as well, so the actual rate, FX rate of those currencies against any other currency is changing constantly, which means that there is an FX risk as well as with any other currency in the world.
Excuse me, sorry. I'm not referring to fiat, to cryptocurrencies. I'm referring to digitalization of fiat currencies.
Well, isn't it already happening with all the digital channels, right?
It's different from e-money, actually. You look at China, for instance, Dubai, for instance, where they are researching to move their fiat currency to cryptocurrencies issued by the central banks.
Oh yeah, I know there is similar move actually in some other markets, like in Russia, for example, they're looking into that as well. But I think there is not enough of usage of this right now. It's all the new initiatives, and actually interesting how it will work. But it seems like those currencies will be upgraded and used in a very, very similar way with regular currencies of that specific country. Yeah, but I'm not sure how this will coexist, which I'm not sure.
Okay. Do we have any other questions for the panel? Yes?
Hello, I'm Eugene from Kuala. My query is...
Can you get closer to the mic?
Okay. Related to the innovation and also in reduction of cost. Actually, some of the governments now, they are providing subsidy to the money transfer operators. Or in any way, that subsidy is going to the migrant immigrants, especially to reduce the cost of sending money back home. So, but if you talk from the another side, if you see from the another side, that subsidy may hinder to the competitiveness and also innovations. So I would like to request the distinguished speakers whether government subsidies should be provided to the money transfer operators or to the clients so as to reduce the cost. Thank you.
No. Because this is a business. Why should we get him subsidies? You know, you sink or swim. Not at all. That's my point of view. It sounds good. You know, if you want to do it for political reasons, that's fine. But then when you go and try to compete in the international markets, it's going to be very difficult. It's like when you look at the, you know, the presentation this morning by the CEO of AirAsia. He runs a business and he's able to survive. You look at different airlines from different countries, like Alitalia, for example. The government has been subsidizing Alitalia for years. No, you know, you sink or swim. No, that's my point of view.
I just want to add to Eugene's point that it's not only subsidies, there are also other instruments that actually kind of messing up with the true competitive market, including taxation. A lot of larger corporations, they're taxed significantly less than any small company, like moms and pop stores, for example. They may pay 30% of their profit, large corporations 5%, and it's most of cases. And to his point, I actually think it creates unfair competitive environment and unhealthy market. So if you were to kind of give subsidy, you're supposed to give basically to everybody, and if you do the tax benefits, that should be also distributed kind of equally or in the same way.
Just one comment on that. I have a different view, so I agree on the fact that the subsidies should not go to, you know, to finance the corporations, because yes, it is a business. If a subsidy would go to finance one new thing, then actually it doesn't happen until now, and that a new thing, it could be any, you know, new business model, new technology, any new innovation. If that if that subsidies that goes to finance the research, the development of that, it makes sense, but not the ongoing operations.
Okay, so we've been given the 5-minute time. I had asked each of the panelists to, at the end, present their one idea or one comment they would like to leave you with for this panel. So, Gene, over to you.
Well, I'm going to make a comment that isn't politically correct. But I think that the UN needs to stop passing resolutions that they cannot enforce and do something to protect immigrants. And we, all of us as an industry, we need to protect our customers. We need to take a position. We talk, yeah, we support the rights of the immigrants. What do we do? And I'm talking about all remittance companies. Nothing. Nothing at all. What do the UN does? They pass all these resolutions that no one enforces. We need to change the way how we behave. Because after all, we're dealing with human beings. That will be a real innovation. To start talking and doing something.
Okay, innovation with impact. Okay, thank you, Jean. Sofia.
I will do non-political comment. That's enough. Good one. So I would say innovation happens when the new technology, old problem, and great idea meets all together. And I think we still have a lot of old problems, and we do have quite